Hi traders, welcome to the new weekly forecast for the trading week starting on July 29th. In the coming week, we have three major central banks coming up with the interest rate announcement. Bank of Japan, Bank of England and US Federal Reserve. Now recently, if you have a look on the data released from the US has been doing fairly well in the recent, as per the recent reports, and it is anticipated that they are not going to bring any change in the coming week in the rate of interest. Moving forward, the rate of interest is anticipated to go down in the next policy. So based on the fundamentals, I think dollar should remain strong in the coming days. And as per the stock market is concerned, we have seen a major shift from the tech to the mid and small caps. So that is reason NASDAQ has been going downwards, whereas Russell 2000 has been doing good. If you compare the charts, Russell 2000 is still looking bullish. So let's have a look on the charts and find the tradable opportunities for the upcoming week. Okay, so let's begin the technical analysis, and the first instrument is Euro versus Canadian. Now I'll start from weekly, and I need to align my chart here. Give me a second. Yes, so here we are on the monthly time frame. Now, in order to understand the long-term trend, I've started from the monthly chart. Otherwise, we usually start from weekly or daily. Now, here on the monthly frame, if you notice, I'll be picking the lowest point here, okay, and I'll be connecting to the first high and the higher low. So it will give us the long-term fib extension lines. Connecting to the first high and the higher low, and after that we have another ABC pattern here. So I'm connecting to the next point now. Now on the basis of higher time frame and the long-term trend, if EURCAD continues in the bullish direction, then the estimated target is 1.6409. Now let's come back to the lower time frame, not on the lower time frame, but in the recent time frame. So here we have lower low formation with bullish divergence. So this is the beginning of the new bullish trend. Now I'll be applying one more time fib extension in the bullish direction, starting from the lowest point. I've connected to the highest, the recent most highest, and I've connected to the higher low. So we got the target here. So based on the recent most fib extension in the bullish direction, the upcoming target for EURCAD is 1.5296 fib extension 100%. So this is the target. Now I'll be moving to the lower time frame, that's weekly, and on the weekly frame again I'll be using bullish divergence here. This time we have again NPN, strong bullish divergence, and this is the breakup structure. So I'll be applying fib extension one more time in the bullish direction, starting from the lowest, connecting to the highest and the higher low. Let's change the color to green this time, and the next target on the weekly frame is here, 1.5529 or 30. So EURCAD, if it continues in the bullish direction, which it should on the basis of the technical chart pattern, then the first target in sight is 1.5296 followed by 1.5529 or 1.5530. Now if you notice, there are no signs against the bullish trend. MACD histogram rising clearly, MACD lines clearly rising without any dent in the bullish momentum. Moving to daily now. Now on the basis of daily frame, I can see there is loss of momentum. The histogram has turned into lighter green color. I can see the MACD lines. They have now not yet formed a bearish cross, but they have started slowing down. So definitely we might get some temporary stoppage of the buyers here. I'll be using fib extension one more time, but this time on the daily frame, and the starting point for daily frame is the lowest point here. So this becomes your A. We have point B here, and we have point C here. So let's connect A, B and C with the help of fib extension. So here we go. So on the basis of the newest on the daily chart, the fib extension levels, the first extension was supposed to be 0.618 with the price level 1.4994, or we can say 1.5000, round figure number. And currently the buyers have crossed this level. This is also the historical high. So we might get some temporary stoppage of the buyers here, but that should be taken as only temporary. No damage to the long-term bullish trend. I'm connecting the higher lows here to get the rising trend line. Done. Now I'm moving to 4H. Now on the basis of 4-hourly chart, we have the sequence of higher lows. So the price pattern is definitely bullish here. So we have beginning of the buyers on the 4-hourly chart, low, higher low, higher low, higher low, in continuation with new higher lows. At the same time, I can see high, higher high, new higher highs on the top, but the new highs are being formed with the potential bearish divergence. So I'm saying here potential because the bearish divergence is anticipated here, but not yet there. So be cautious. Don't jump into a bearish trade or a sell trade blindly. Now I'll be applying a new trend line connecting from the lowest point. So this is a new rising trend line on the 4-hourly chart, and no damage to the bullish pattern here. Moving to the next lower time frame, that is 1H. Now here on the basis of 1-hourly chart, as you notice, we have the potential bearish divergence, again potential, because on MACD histogram it has been formed. Histogram has started going down. MACD lines, they are expected to make a bearish curve here, and we might get bearish divergence here. So slow down in the bullish momentum on the lower time frame, but higher time frame it's still intact. I'll be using 1-hourly chart to plot the new rising trend line here. So we got the new rising trend line, the latest one, 1-hourly. So if you want, I can change the color here to differentiate. So the light blue line, rising trend line, is on the 1-hourly frame. Now let's move to 15 minutes. Now if you notice on the 15 minutes, we still do not have any bearish divergence. So which means that counting from the latest higher low, this is the bullish move which took the price higher than 1.5000. We might get a retest of this level or the rising trend line, and the buyers may continue. So if you want to get into a bearish setup, that will be short-lived, and you should get into the bearish setup only when you see break below this light blue colored rising trend line. That will be short-lived, but the ultimate plan is to look for buying on the dips. Now the next currency pair is Euro versus Japanese yen. Now JPY pairs, they've been in amazing bull run since 2020. So again, I've started with the long-term chart here. I'll be cleaning all my existing drawing, and I'll start from the lowest point on the monthly chart. So I'll connect the lowest point. The visible lowest point is here. Then we have a high point here, and then we have the higher low here. So I'm going to connect ABC here. Joining A to B and B to C. Now it's picture perfect scenario. EURJPY reached to fib extension 100%, and the price level was 172.42. We can also say the round figure 172.50, the quarter number. The buyers were blocked exactly on the fib extension 100%, and I can see some slowdown being developed on MACD histogram. MACD lines are still creating higher highs, but on MACD histogram there is continuing type bearish divergence, which means there will be some short-term bearish moves in the market, EURJPY, and please keep in mind that in the coming week we have monetary policy announcement from the Bank of Japan. So Japanese yen is rising for past 2 weeks, and on the announcement we might get some bearish moves if the market does not get the anticipated announcement from BOJ, Bank of Japan. So we might get some weakness in Japanese yen for the short term, which might give temporary pullback. So let's talk about on the lower time frame. You will understand in more clear picture, in more better way. So I'll be using one more time Fib extension starting from the next high low. So next ABC will be formed here. So if you notice, okay, I'll again I'll differentiate the next one with the blue one. Okay, so the higher time frame, the previous long-term cycle Fib extension 100% completed with the green line, and the next one has been completed again Fib extension 100% with the blue line, and the price level is 165.33. So we got a major resistance at 172.45 or 50, and we got Fib support at 165.33, and currently we are playing in between. The current price is 166.87, so there is still room for few more pips to be captured in the downward direction. Now if you notice on the weekly frame, we got clear bearish divergence printed on MACD histogram and even on MACD lines. So which means the buyers are exhausted and the sellers are looking for the opportunity to control the market. Now let's apply a rising trend line on the latest pattern, starting from the lowest. So this is the rising trend line coming on the latest bullish pattern. Do we have break of structure here? No, the weekly BOJ break of structure is not yet done. We have break of structure level at 154.47, which is quite far. Moving down to daily frame now. On the basis of daily frame, again we could spot bearish divergence between the latest highs. So here we have histogram divergence starting from the higher highs. So your BOS comes again at the Fib extension 100% of the bullish cycle, which is not yet done. So we might see that the sellers may continue up to 165, get rejected, and the buyers may take control on the announcement of BOJ. Buyers can go back to the same resistance level and then a shift downwards. So this is highly anticipated. Now if we move down to the next lower time frame, that is 4H. Now on the 4-hourly chart, we have found that the higher high pattern came with bearish divergence and the BOS was completed. So the sellers are in full control on 4-hourly chart. Now, do we have any signs against the sellers? Yes, we might get bullish divergence because we are right now at a very, very strong support level. But currently, I don't see divergence being formed. On histogram, there was potential bullish divergence, but on the basis of MACD lines, I can see lower low being formed in conjunction with the price pattern. So there is no bullish divergence on the charts on 4-hourly, which means there will be continuation for some more time. I'll go to 1H now. Again, on the 1-hourly chart, I'm going to apply a falling trend line here. I'll be starting from the highest point and I'll connect the lower highs. So the buyers, if they want to take control, they should break above the falling trend line and continue to the next Fib resistance level. If not, then the sellers might come back, make one more low, slightly lower than the Fib resistance support level with bullish divergence, and then we might get the correction. So 165 is important level to watch out. There will be a short-term reversal anticipated in the bullish direction. I can also apply Fib extension in the downward pattern on the 1-hourly chart. So I'll start from the highest and I'll connect to the first major low here. And this should be marked red as it's bearish. So here we go. And we have Fib extension 2.61 already reached. Currently, the buyers got rejected at Fib extension 1.618, which is now playing as resistance, and there is a very, very high probability that the sellers may continue to 163.32 level. There is a reason for that, because I'll be applying one more extension in the downward direction, so that we can have duplication levels, confluence of multiple Fib levels, and to get the magnet zone defined. I think I'll go to 15 minutes to get a clear picture here. Give me a second. Yes, I'll be using 15 minutes to plot the Fib extensions in the downward direction. So starting from the highest point, connecting to the first low and then the corrective pattern, and after that we have next ABC in the downward direction. One second, I'll apply next ABC. With a different color. So the duplication resistance level is somewhere here. So this will be short-term major resistance. So buyers need to break above 168.92 in order to retest 172, and otherwise, if buyers get rejected around this area, then the downward trend may continue, and the next duplication level or the magnet zone in sight is around 163 to 162.5, followed by 161. So the plan is clear. If we get short-term bounce in the upcoming week, please keep in mind we have BOJ announcement coming up in the upcoming week. So it's going to be volatile based on the monetary announcement. So if we get a pullback, I'll be taking it as an opportunity to sell. First opportunity should be taken around 168.92. If we get a breach above this level, then the next opportunity should be formed around 172. So sell on the rise is the plan for the coming days. The next currency pair I want to talk about is pound versus US dollar. Now again, I'll start from the weekly frame here. Now if you notice on the weekly chart, I'm talking about a very wide bullish divergence here, lower low formation with MACD lines creating bullish divergence, and on this basis we have break of structure at 1.4250. So the red line is the BOS required on the weekly frame, and I'll be applying Fib extension in the bullish direction on the basis of A, B, and C. So let's apply Fibonacci extension in this direction. So the potential target, bullish target on the basis of Fib extension 61.8 is 1.3515. We also have a triangular pattern here. We have rising lows, and we also have falling highs here. So the buyers, they've been successful in breaking above this triangular range, and the resistance here is also breached, which is around 1.2850. Now we also have one more rising trend line by joining the lows, and I'll move to daily now. Now on the basis of daily frame, we have another rising trend line connecting the lows here. So the daily rising trend line is intact, weekly rising trend line is also intact. I'm going to differentiate the daily rising trend line with a darker blue color here. So this is our daily rising trend line. So there is no point of selling until sellers get the control by breaking the daily rising trend line. So if the sellers, they break below this daily rising trend line, then I'll talk about selling. Otherwise, the plan remains bullish here. Now, I do not see any bearish divergence here. If you compare, we have higher high formation. We have higher high formation of MACD lines, and we have higher high formation of MACD histogram. So no bearish divergence coming into picture even on the daily frame. So that's the reason the triangular pattern is broken in the bullish direction. Market is creating higher highs and higher lows. No signs against the buyers. Now let's move down to 4-hourly chart. Now on the basis of 4-hourly chart, if I take into account the latest rising trend, so I'll start from the retest of this trend line. This is the latest bullish trend. So the pattern here is corrective. We might get short-term correction, retest of the rising trend line, and continuation in the bullish direction. We can also apply fib retracement here. So I'll start from the lowest point, connect it to the rising trend line, and I'll go to the highest point to check the retracement levels here. Now, if you notice, currently we are sitting below 38%. There is a high probability that the sellers, they might continue in the short term and take the price to 50% or even 61.8, which is confluencing with the rising trend line. So this is the point where I can see reversal and the buyers might get control. On the other side, I can see the sellers are already weak because we have bullish divergence built on MACD histogram, but there is no BOS. Now let's move down to 1-hourly chart. Now on the basis of 1-hourly chart, again I can see the control is with the sellers because we have bearish divergence on the top. We got the break of structure, and since then they are creating lower highs and lower lows. So starting from the highest point, we have high, we got lower high, again we got lower highs here, ranging pattern, lower highs, lower lows, lower highs, and lower lows. I do not see any bullish divergence coming into play, so which might give some advantage to the sellers in the short run. So I'll be connecting a falling trend line here. So the falling trend line should be taken as resistance. The rising trend line here should be taken as support. I'm expecting short-term bearish trend for pound dollar and ultimately getting into the bullish trend around 1.2775. So this is the plan for pound dollar for the coming week. Now next is NASDAQ. Now as I've told that I've seen that in the US stock market, there is a major shift from the tech sector to mid caps and small caps. That's the reason Russell 2000 has been bullish, but NASDAQ has been going lower. I'll explain with the help of multi-time frame analysis on the chart. So I'll start from the weekly here. So what I've done here, I have created fib retracement from the lowest point visible on the weekly chart. So this is the lowest point and I've connected to the highest point. Let's apply Fibonacci retracement here. Connecting A to B. You just need to make sure if it is, yes, now this is perfect. So we have not yet seen 23% retracement, right? I can see weakness in the buyers because there is bearish divergence on MACD histogram. Also some sort of divergence on MACD lines. Not a clear picture, but definitely there is divergence on MACD histogram. I'm going to daily frame now. Now on the basis of daily frame, I can see bearish divergence on the highs. So higher high formation with bearish divergence, P and P, even on the MACD lines. I'm going to connect a rising trend line here to see if the daily trend line is breached. We don't think so. So this is the daily rising trend line, which is still intact. So the buyers are in control until we see a break below this rising trend line, although we have weakness in the bullish pattern on the basis of weekly bearish divergence followed by daily bearish divergence and the breakout structure. The daily breakout structure is here. So the level for the BUS is 19,733. Right now, the market is below 19,733, way below. It's around 19174. Let's move down to the 4-hourly chart. On the basis of 4-hourly chart, I can see the pattern is clearly bearish. We have high, lower high, lower high, followed by low, lower low, and lower low. I do not see bullish divergence on MACD lines. On the basis of MACD histogram, yes, there is divergence, which might send chart or prices slightly up, followed by continuation in the downward direction. I'll be applying a falling trend line here to check the resistance. So we can use trend line connecting from the highest point. So here we go. So this is the falling trend line. So in case if buyers want to take the control, then the buyers, they have to break above the falling trend line like this. Otherwise, there might be a retest of the falling trend line, short-term correction, and continuation downwards. Now, since it's bearish, I'll be applying fib extension in the downward direction multiple times, starting from the first ABC downward, followed by the next ABC in the downward direction. So I can see that we have duplication levels here around 19,370. So 19,370 becomes a strong resistance now, since the current price is lower than this level, followed by the next major resistance coming around 19,735. So if buyers want to enjoy the control of NASDAQ, then they have to break above 19370, followed by 19733. Otherwise, the trend remains bearish in the short run. Now let's move to 1-hourly chart. Now as per 1-hourly chart, I can see the buyers, they made an attempt to bounce and clean this resistance, but they failed. The price remains lower. I can see weakness on MACD histogram, divergence being built here. Sorry, there is no divergence, but weakness on MACD histogram. And the sellers, they remain in full control for NASDAQ at the moment. Going down to 15 minutes, I don't see bullish price action here. The rising trend is not so powerful. Again, a triangular formation here. We might get break above this triangle. We need to clear, the buyers, they need to clear above 19370, followed by 19733 or 19700. Otherwise, we should look for short-term selling opportunities around 19370, followed by 19,700. And what is the downside target? For that, I need to go back to 4-hourly chart to see the duplication zones of the Fibonacci. So here is the next upcoming target. On the basis of duplication, I can see the next target is 18,355. So until NASDAQ remains below 19,700, the next upcoming target for the sellers is 18,355. Now finally, I'm moving to gold. Now here I've talked n number of times that the long-term trend is still bullish for gold. I do not see any dent in the rising trend line on the basis of weekly chart. So this is the weekly rising trend line. Moving to the next lower time frame, that is daily. Even the daily rising trend line is intact. It hasn't been damaged yet. Followed by 4-hourly. The 4-hourly rising trend line is here. So currently, gold bounced from the 4-hourly rising trend line. If you notice, we have bullish divergence here, lower low formation and bullish divergence. I can apply Fibonacci retracement starting from the lowest point here. It's double bottom here, so I can start from here. This becomes our A. We have B. I'll be applying Fibonacci retracement. So on the basis of 4-hourly chart, we got correction exactly to Fib retracement 61.8, slightly lower than that. We got the retest of the rising trend line, and now I can see the buyers, they want to take back the control. Now, did buyers get control? Not yet, because they have not cleared this high. So if you apply divergence, then the BOS is around this area, which in terms of price level, I'm talking 2431. So we are quite far from this level. At the same time, I have the opportunity to apply a falling trend line here. So currently gold is locked between rising trend line and the falling trend line. Falling trend line, let's make it red here. The rising trend line is here at the bottom. So if you want to make money in gold in the coming week, then capture the short-term moves. So the first opportunity is to capture the bullish trend up to this falling trend line. We are currently at an important resistance level, which is at 2386. Let's move down to the lower time frame, that is 15 minutes, to understand what is the pattern here. So on the basis of 15 minutes, I could see lower low formation with bullish divergence, and the BOS is already completed. So BOS is playing like support right now, which is at 2381. I also have the opportunity to apply fib extension on 15 minutes. So on the basis of fib extension of 15 minutes, we are exactly at extension 100%, 2389, and the buyers, they are unable to break above 2389. They were not successful in the current week. In the new week, coming up week, if the buyers, they break above 2389, then they should retest 2403, the next fib extension level, followed by 2412, which will also give us the break above the falling trend line. But ultimate control will be when they clear 2430. We can also apply a rising trend line here on the basis of 15 minutes chart. So a break below this rising trend line should be taken as short-term selling opportunity, with the bigger rising trend line as your target. So this is the short-term plan for gold in the upcoming week. It's playing between the triangular boundary. The major long-term trend would be established once it breaks above or below the long-term triangular boundaries. So this is my plan for the coming week. I hope I've added some value to your trading plan, and have a profitable trading week ahead. Bye-bye.